Welcome to Factful Finance. Today, we're diving into a question that pops up frequently in the finance world. Is it worth it? Whether it's a high-interest credit card, a new investment, or a financial product, we all face decisions that come with the big question of value. And, let's be honest, it can be tough to determine what's actually worth it and what isn't. After all, how do we know if a financial move is going to pay off in the long run? Let's break it down. But first, did you know that nearly 40% of Americans can't cover a $1,000 emergency? That's a serious wake-up call when it comes to financial planning. Today, we're going to make sure you have the knowledge to make smart decisions, so you're never caught off guard. Before we dive deeper, just a quick note. This is all for educational purposes. Always consult with a professional for guidance specific to your personal situation. So, when you're evaluating a financial decision, ask yourself these key questions. 1. What are the costs involved? Whether it's an upfront cost, an annual fee, or even hidden charges, you need to understand exactly what you're paying for. 2. What is the potential return or benefit? Will it save you money in the future or provide long-term value? Consider both the financial and emotional impact. 3. What is the risk? Every financial decision carries some risk, whether it's an investment that could fluctuate or a decision with long-term consequences. How much are you willing to take on? Let's put this into perspective with a real-world example. Say you're debating whether to invest in a retirement account. On the surface, it might seem like a small contribution each month doesn't make a big impact. But let's break it down. If you contribute $300 per month to a retirement account with a 7% return, after 30 years, you could end up with over $400,000. That's the power of compound interest. Small, consistent contributions can snowball into a major payoff. Now, let's talk about credit cards. Credit cards can be incredibly useful, but are the rewards worth the cost? Many cards offer cashback, travel points, or other perks. But if the interest rate is high, it could negate any benefits. For instance, if you carry a balance on a card with a 20% interest rate, the rewards you earn might not outweigh the interest payments. You need to do the math to figure out if it's worth the cost. Here's another example. What about refinancing your mortgage? Many people wonder if refinancing is worth it, especially with the costs involved. But let's say you could reduce your mortgage rate by 1%. If you have a $300,000 mortgage, that small change could save you $3,000 or more each year. When you consider the long-term savings, refinancing might be the right move. However, if the fees outweigh those savings, it might not make sense. Now let's touch on a common question. Is it worth it to hire a financial advisor? This depends on your personal situation. If you're just starting out and need guidance, an advisor can help you build a solid foundation. But if you have the time and knowledge to manage your finances independently, it might not be necessary. The key is assessing the value they bring. A good advisor can help you avoid costly mistakes and make informed investment decisions, which can be well worth the price if it results in higher returns and reduced risk. In every financial decision, balance is key. Weighing the costs, benefits, and risks will give you the clarity to make informed choices. Remember, just because something looks good on paper doesn't mean it's worth it in your unique situation. Take your time, do the research, and consult professionals when needed. So, what's your biggest financial decision right now? Is it worth it? Drop a comment below. I'd love to hear your thoughts. Thanks for watching. If you found this video helpful, give it a thumbs up, subscribe for more tips, and hit the bell so you never miss a video. Until next time, keep making informed financial decisions right here on Factful Finance.